Hello, good morning. You're watching the newspaper show right here on ETI Now. I'm Cheryl D'Souza and I'll take you through all the top stories that's there on the Economic Times. So let's get going with the top 10 headlines that's there this morning for you. First up is bankers suggest 10 lakh crore rupees capital infusion to Prime Minister Narendra Modi. Remember that he had a meeting with the heads of PSU bank heads. Let's shift focus now. RBI debates options beyond loan rejig and moratorium. AG says the GST panel can take call on market borrowing. A bid deadline for BPCL set to be extended. Reliance Industries to buy minority stake in Future Group's FMCG business. You have Piramal puts a glass business up for sale. NEP marks a flexible and integrated approach. Unlock 3.0 guidelines say the gyms are allowed night curfew to be lifted. Serum Institute told to resubmit vaccine trial plea. And lastly, US tech giants abusing power, Democrats tell CEOs. Alright, and those are the top headlines that's there in the Economic Times for you this morning. But let me shift focus and let's talk about the top market headlines that's there in the paper. First up, it is PBoC hikes Ambuja Asian Paints stake in FY20. You have companies can now submit results up to September 15th. Indigo flies into record loss of 2,844 crore rupees. Mindspace REIT IPO subscribed 13 times. And US Federal Reserve leaves rates near zero to use all its tools. Now from market on to a corporate headlines then. Maruti skids into red for the first time since 2003. Your Bharti Airtel thus posted 15,932 crore rupees net loss on AGR provision. High Court relief for ITC in trademark case versus Godfrey. IT companies in race for government contract to supply tablets. And end of season sales go out of fashion. Alright, and those are top headlines is there in the Economic Times for you this morning. But let's shift focus to the top story that's there, and that's the cabinet decision on the new education policy. Details of that is there on your Economic Times page 2. Here you go. This is the snippet of the new education policy, and in a sweeping toddler to college reforms seen as the most ambitious since the introduction of its 10+2+3 system. The government on Wednesday unveiled the new national education policy. The new education policy actually restructures school education by introducing 5 years of foundational education, de-emphasizes high-stakes boards, introduces a SAT-like university entrance test, and offers the option of a 4-year bachelor's degree. Actually, the changes in the board structure, which seek to make the exams a test of core competencies, will be implemented from the 2021 academic session. The new university entrance test will be implemented for college admissions in the 2022 academic session. So that's a big change coming in for the education sector altogether. New education policy is set to change the way how the structure has been so far. So this is a big thing coming out yesterday out of the cabinet, the new education policy. But let's shift focus now onto page 2. And yesterday the Prime Minister held meeting with the head of PSU banks, and this is the story here. My colleague Ruchi is standing by to tell us what was discussed in the meeting with Prime Minister. Ruchi, take it away.
Prime Minister Narendra Modi met the top brass of financial sector, including NBFCs as well as PSU banks. We're given to understand that Cabinet Secretary, along with top officials from Finance Ministry and Finance Minister Nirmala Sitharaman, were all present for this meeting. We're given to understand this is a meeting that lasted over 4 hours. In fact, in this meeting, the Prime Minister sought presentations on the performance of the economy and especially various sectors like MSMEs as well as agriculture from the banking system. After the presentations were over, we're given to understand that Prime Minister Narendra Modi gave an address to the bankers where his message was very clear that the banks have to support the economy during these times and the government will do whatever it takes, whatever is needed to support the banking system. In fact, this is also coming in as an assurance that if the banks need, then the government will be open to providing more capital to support the Indian banking system, coming in at a time when the RBI has already said that if the stress in the system increases, then from the current level of close to 8%, the NPAs in the banking system may rise to about 14%. In fact, Prime Minister Narendra Modi in his message to bankers also said that the banks should focus on not just lending but lending without fear. There should not be any fear of giving out loans. The banks should focus on small and medium enterprises, especially after collateral free loans of close to 3 lakh crore rupees were announced as a part of the stimulus package. The Prime Minister also told the banks to support the government's mission of an Atmanirbhar Bharat push. In fact, the Prime Minister's message, in fact, this was the Prime Minister's first such meeting that he held with bankers after COVID-19 hit the Indian economy. And while these are tiring times for the economy, it is important that the financial sector comes up to speed so that the government is able to push growth forward.
For taking us through the details of the Prime Minister's meeting with the bankers. Now let's shift focus and let's talk about some corporate earnings. Page 1 of Economic Times, and this is the story that I'm going to talk about, and that is Maruti Suzuki. That particular company reported its first loss ever since 2003. That is the time when it was listed. What are the other details of the earnings and why such a big miss coming in? We all know it's because of COVID pandemic, but to take us through the details of the earnings, I'm joined by my colleague Karunya. Karunya, take us through Maruti earnings. Definitely first loss since 2003.
Well, it's definitely been a weak performance delivered by Maruti given the unprecedented circumstances and the fact that they've also stated that a large part of the quarter gone by, which is Q1 of FY21, saw zero production and zero sales because of the lockdown. Production and sales started in a very small way in the month of May itself, but looking at the performance, revenue was in line with what the street was expecting at 4,106 crores. It was down 79% as well. But yes, it was expected given how weak the volumes have been in the quarter gone by. Even they fell in a similar quantum of 80% YOY. Production during Q1, the management said, was equivalent to just about 2 weeks of regular working level. They've sold a total units of close to 76,600 units in the quarter gone by, and on back of that they've reported a loss of 249 crores. We were expecting a loss as well, but the loss figure they've managed to deliver is actually better than expected, because our poll was indicated into 340 crores. They have handed in a loss of 249 crores. As far as EBITDA is concerned, it's definitely the first time that the company has reported an EBITDA loss. 863.4 crores, way worse than what we were expecting. Perhaps on back of that, the stock suddenly reacted quite sharply and quite negatively after the numbers came by. The loss, the company says, was partially offset by lower operating expenses, higher fair value gain on invested surplus as well, but clearly wasn't enough to cushion the impact on their operating performance, which came in way below par. This is all we have now. All eyes on the analyst call, which starts at 3:30. Let's see what the management has to give us in the form of an update on production, demand, discounting trends, prepping for the festive season, etc. So let's wait and watch for that.
All right, thank you, Karunya, for taking us through the numbers of Maruti Suzuki. Yesterday, it posted the net loss for the first time since 2003. Let's shift focus now on to a story that's there on the page 5 of Economic Times, and this is the story that my colleague Pankaj will be joining in to talk about, and that is about Piramal. They've put their glass business up for sale. They are eyeing $1 billion valuation. Why is Ajay Piramal taking this step? I'm joined by my colleague Pankaj to take us through the details. Pankaj, definitely after unlocking the value in pharmaceutical business, Looks like Ajay Piramal is looking at some non-core businesses as well.
So, of course, as you pointed out, Piramal Glass, which was earlier listed, now, of course, it's a private company, is something where, what we are picking up from Economic Times is that it could be on the block. Basically, they're looking to sell that out. Remember, just recently, Piramal did a deal where they got great valuations for 20% stake in their pharma business from Carlyle, and now they are looking at selling their Piramal Glass business, which is, of course, a part of the non-core strategy that, essentially they have. So when we just look at, really what's happening, so they are mandated to two firms, Access Capital and one other, to find a suitor for this business. What we are also picking up is that names like KKR, Advent, some of the other PE players have shown interest into this. Valuation could be tune about 800 million, but I believe this is a private company, and that's why it may not impact the stock, but definitely a good call that has been taken to exit the non-core businesses, and this is a part of that strategy.
All right, Pankaj, thank you for taking us through the details of that story that's there in the Economic Times. Let's shift focus now on to another corporate earnings. As Bharti Airtel came out with their numbers yesterday, and how were the numbers? Sunita is here to take us through the details. Sunita, looks like Bharti Airtel has posted a huge loss. Is this the AGR worry?
Maruti Earnings Q1 performance was largely impacted because of the extraordinary items. The company has made aggressive provisions for their pending AGR dues, and which led to them posting a net loss of over 15,000 crore rupees. But if you look at the operational performance, there were bright spots. The company's performance, as far as ARPUs is concerned, was better than what Street was expecting. ARPUs came at 157 rupees versus 154 in the previous quarter. However, the Street was expecting a decline in ARPUs and they were expecting ARPUs to come at 149 rupees. So that performance was much better than expected. As expected, the company saw a decline in its subscriber base, and even the 4G additions were impacted because of lack of availability of phones during the lockdown period. This is likely to improve, as we saw in the July subscriber addition. We expect this performance to improve. As far as analysts are concerned, they say that with company providing for almost all the AGR dues, the big overhang on the stock should be lifted, and the performance is also expected to improve. As we have seen in this quarter, the data consumption because of work from home phenomena has gone up. So this should lead to ARPUs further improving in the coming quarters. But we'll have to wait and watch for the management commentary in the con call when the company talks about what possibility of the second round of tariff hike can be, and what is the trajectory they're expecting for
Bharti Airtel earnings. Now moving on from Bharti Airtel to Indigo, another counter that posted loss in yesterday's earnings when it delivered its Q1 earnings. What impacted Indigo earnings is definitely the lockdown across the globe. But what are the other details of the earnings? I'm joined by my colleague Vivek to get us through the details of this. Vivek, Indigo numbers, please let us know how were they?
Well, if you wanted any indication of how exactly the lockdown has impacted corporate earnings, the best indicator is Indigo, that is Interglobe Aviation. Have a look at the numbers. It's been a total washout as far as Indigo is concerned. And what has actually happened is that a lot of it was priced in, a lot of it was something that the market already anticipated. But still, just look at the numbers on a year-on-year basis. It's a bit of a shocker. You're talking about revenues going down almost 90% on a year-on-year basis. And again, this is something that the market really, is quite subdued, given the fact that yields as well as load factors were something that were quite subdued. The EBITDA loss, now remember the earnings before the income tax, depreciation, amortization, as well as the rental costs are something too that has come in at a significant loss of a little over 1400 crore rupees. You're talking about the company declaring a loss of close to 2840 crore rupees. Expectations were close to that, but still, the actual loss figure has come in slightly above what the Street was anticipating. We also heard the con call. Now the management is going in for a fundraising. Now the management is doing all that it can in its power to go ahead and ensure that it can conserve cash. And what is actually happening is that the company is doing fundraising. The company has gone ahead and taken significant salary cuts. Company has also said that it hopes that the fare caps that the government has put as far as the entire industry is concerned also goes away quite quickly. So overall, very cautious positivity coming in from the conference call. However, the numbers are a bit of a washout along expected lines.
For taking us through Indigo's Q1 earnings, definitely, like you mentioned, any indication of how the lockdown has impacted the corporate earnings, and Indigo definitely over there flagging off huge concerns. Let's shift focus now on to page 1 of Economic Times, and this is the story that I'm going to talk about, and this is about the GST Council and what the Attorney General has to say. The Attorney General has said that the GST Council can decide whether a market borrowing mechanism can be established to compensate the states for their revenue revenue loss due to implementation of the indirect tax. This is as per sources to Economic Times. The Council has sought the opinion of the government's top lawyer to top officer on the suggestion of the states that if the revenues fall short, funds should be raised by the council from the market to compensate them. The centre has expressed its inability to do so for FY21 because of COVID-19 outbreak that has impacted the tax revenues. The other options that are on the table, the council can consider including what they can rather consider is one is to increase the GST rates, bring in more items under the compensation cess, or increase the cess rate. This is as per sources to Economic Times. Remember that there is an issue with the GST where the centre is unable to compensate the states for the revenue losses. So here you go. This is what the Economic Times has picked up, that the Attorney General has said that the GST Council can take a call on borrowing from a market in a bid to compensate the states for revenue loss. Let's shift focus now on from that story to Reliance Industries and future retail, and what's the latest on that. From the Economic Times that we are picking is eye on future RIL to buy a minority stake in its FMCG business. So what is the details of this particular transaction and what it's going to look like? I'm joined by my colleague Winnie. Winnie, take us through the latest that's coming out on this front. Every day we hear headlines about Reliance Industries and future retails, and what is this time around?
Cheryl, absolutely it's correct that what you're saying, that we're hearing something new about the deal every day. Now, today what we're hearing further as the deal goes further, we're hearing that Reliance will now look to buy a small stake into the FMCG business of Future Group as well. That is Future Consumer Limited, which has brands like Tata, Tasty Treat, Golden Harvest, Clean Mate. So all these brands are a part of Future Consumer Group, and they deal with kirana stores as well as modern retailers as well, which is outside the Future Group network as well. And they have a sales of around 4,000 crores. So as a part of the Future Retail deal, they will be looking to buy a small stake in this company. Now, how is this deal going to work out is that Future Group will merge its 5 listed entities into one, that is Future Enterprise Limited. That is all its groceries, apparel, supply chain, consumer business into Future Enterprises. And once that is done, Future Enterprise Limited will then hive off the retail the retail assets and sell that to Reliance and as a single unit, as a separate unit. So in that, after that, Reliance will also be buying further a small stake in the FMCG business, that is a Future Consumer Limited business. And that's how this deal is going to work out. So obviously this gives a further benefit to Reliance as well as, because they'll further foray into more stores and online segments, kirana stores. They have a wider reach to the consumer business as well because of Future Consumer Limited. And Future Consumer is also something that owns Big Bazaar, if you go to see. So, that surely gives Reliance a hand over there also, and gives more of a benefit to Reliance for, deciding the pricing, the discounting strategies for products that are sold. And that will be a benefit for Reliance as well as, obviously Future Consumer Limited will, have the continuity of sales and supplies as well as the FMCG products. And only a part of the stake will be sold to Future Reliance is what is said according to BVT reports.
All right, Vinny, thank you for taking us through the latest that's coming on that particular front. Now, let's move on to page 11 of Economic Times. And this is the story that I'm going to talk about. And that is the U.S. internet giants are abusing power. That is what the Democrats are telling the CEOs. The CEOs of Amazon, Apple, Google, Facebook answered Congress's question in a rare joint appearance US technology giants have too much power and control over digital markets and are harming workers, consumers and small businesses across the economy. That's the word coming in from Democratic lawmaker heading a House inquiry into the companies. The representative David Cicilline of Rhode Island on Wednesday leveled a blistering attack against Amazon.com, Facebook, Apple as well as Alphabet as the company's chief executives testified before the House Antitrust Committee. The companies are gatekeepers to digital economy with the power to shake down small businesses and pick winners and losers. That is what David Cicilline had to say yesterday. So there you go. Democrats are telling US CEOs that US internet giants are abusing powers. You have Amazon, Apple, Google as well as Facebook. They are answering the Congress's question in a rare joint experience. So that is the latest that is coming on that particular front. But well, with that, we are out of time on this edition of the newspaper show. Thank you for watching. But before that, you can dive into the news, especially for the hearing impaired.